Hey guys, welcome back to yet another video. My name is James Pakion and you are watching Pakion FX. Today we are going to be discussing something that's quite interesting, and basically it really focuses more on the investment options that are available for a trader to involve themselves in. So today we are going to be discussing the types of markets that an investor trader can be able to trade in, and we are going to look at these markets because it's easier to get into them, because normally a trader is able to invest with at least $100 or above, which ideally makes it quite a cheap option for you to be able to get yourself into basically the market. Okay, so these types of markets are quite popular right now. So we are going to discuss 5 of them, and I am going to list them according to what I think are the most popular ones and according to size. Okay, so let's get straight into the video. So number 1 is the Forex market, which ideally is what we majorly deal with on this channel. So the Forex market basically deals with the exchange of one currency for another. So what you do, basically you take a currency, for example, you're exchanging the euro to the US dollar, or from the US dollar to maybe the British pound. So normally the Forex market comes in pairs. So basically the currencies that you're going to trade usually come in pairs. So you'll find it's either USD, Kenya shilling, or euro USD, you understand? So you have to trade one currency for another. And under currency pairs, we have three major classifications of currencies. So number 1, we have the major currencies, and the major currencies are the ones that are usually traded the most, and they are very liquid. They have a lot of liquidity, and usually they have, what denotes the major currencies is that they have the US dollar as part of the currency pair. The second type of currency pair is the minor currency pairs, and normally these ones don't usually have too much liquidity because they're not very popular, and they're not traded as much as the ones that have the USD in it. So what denotes the minor currency pairs is the fact that they don't have USD as part of the currency pair. And finally, we have the exotics, which basically are the currency pairs which are barely traded. They are very unpopular, if I can say that. And these currency pairs are for countries which don't really participate in the bigger Forex market, such as the Kenya shilling, the Ugandan shilling. You'll never see this quoted by brokers around you because they're not as popular and they're not being traded as much. So on to the second type of market that you can trade in as a trader is the stock market. So the stock market basically involves the buying and shorting of shares of a company. So for example, today the companies which are the most popular include maybe Tesla. You guys might know about that, the car making company in the US. We also have Apple, we have Microsoft. So ideally you as a trader can be able to trade in this stock exchange market. So basically what you do is you buy a share at a particular price, and you either wait for it to get to a particular price before you sell out and get your money back, or ideally you can short the stock, which means that you sell the stock while it's at a high price, and then you wait for it to drop. So once it gets to a lower price, then you ideally come out of the trade with your money. Okay, so on to the third type of market that a trader can find themselves invested in is the options market. And this is actually one of the most confusing, especially if you're beginning to trade. This is one of the most confusing markets you can be in, the options trading. So basically in the options market here, you undertake positions in the derivatives of an asset. Okay, so basically this means that you're deriving the price based off of an asset. Okay, so it's not really a real thing, if I can say so. So an options contract is an agreement between it's an agreement between two people, basically, or two parties, to facilitate a potential transaction. And this transaction is based on an underlying security at a preset price. Okay, so this price is actually referred to as the strike price. Okay, so this whole thing is undertaken prior to or on the expiration of a particular date. Okay, so basically options trading, you'll find that it has two things. It has the put, or it has two types of option contracts, which is the put and the puts and the calls. So basically the puts, you bet on the appreciation of a stock or an index based on a particular limited short period of time, or and the second one, the calls, which is ideally the profiting from price decline. So basically the put is like taking a long on the forex market, and the calls are like taking a short. Okay, so onto the fourth type of market that you can involve yourself in is the ETFs, or the exchange traded funds. So if I can break down the ETFs into a more understandable language, ETFs basically they refer to, it's a type of security that tracks various sectors. So this may include industries, currencies, commodities, and basically it represents a lot of all this. And trading to those is similar to trading stocks. Okay, so these funds can be bought or sold rapidly or held long term. Okay, so ETFs basically just represents a lot of all of these things, but it is also a derivative. Okay, so it's based on a particular asset. It's not the asset itself. So ETFs are traded because during the day plenty of people are either buying or selling the ETFs. So there's liquidity in the market, and wherever there's liquidity, then ideally you will find traders, because you're able to make money from either taking longs or shorts on that particular market. Okay, so lastly, the CFDs, which in full I've said is the contract for difference, basically is a hybrid of both the stock, the forex, and the options market, and it allows you to place trades in a derivative produced based on an underlying asset. So basically CFDs are also derivatives, they're not the real thing. So basically here you find things like the certain derivatives that, rather the certain CFDs that you can find in our current market or being offered by your broker may include the indices such as US 30, NAS 100, the German 30. Those are referred to as the Kshs CFDs, and we can also find the metal CFDs, which include gold, silver, and whatnot. And also you can find some can refer this to as the Kshs derivatives, or rather the Kshs CFDs, and these include the oil, the natural gas, and whatnot. And also CFDs can also represent the crypto market. Okay, so basically that's the breakdown of all the 5 types of markets that a trader can be able to involve themselves in. So you as a beginner trader, it's up to you now to decide where you want to get yourself into. So from me, what I will advise you to do is to get into a market that actually won't mess you up in the beginning, because you need to actually ease your way into trading any particular type of market. Most people who get into the options trading end up losing a lot of money. That's ideally what I've seen and what I've heard from a lot of people, because options trading is it's extremely draining to your brain, because it exposes you to an amount of anxiety and risk that you're ideally not exposed to, because it moves very fast. It is actually based on expiration times. So if your bid or whatever you've done has not been executed the right way when the expiration date reaches, then ideally you end up losing plenty of money. What I will advise a beginner trader to involve themselves in is the forex market or the stock market, because these ones move quite gradually. It's not as volatile as say something like the options. So if you want to involve yourself, for example, in the stock market, you can find brokers who are offering this service. Buy a particular stock and just hold it long term and see how much you can be able to gain from the particular rise of that stock. What you will find is that stocks do rely a lot on the fundamentals, so do pay attention to the news and to how these particular companies are performing. So for example, right now Tesla has really climbed. Basically the shares of the Tesla have really increased in value. So if you had bought Tesla shares say 5 years ago, right now you could be in plenty of profit, because they've really grown substantially over the years. And this is because, of course, it's becoming easier and easier to produce electric cars, and they are being consumed by more and more people. So that's something to be able to consider. Another thing you can be able to get yourself into is the Forex market, which actually is also way easier as compared to something like the options trading. So here you're also able to make money off the movement of particular currency pairs. So you're able to trade between, say, you can take a particular pair, say GBP USD, and be able to trade this pair. So you analyze the market and see how. The good thing with the Forex market is that you're able to implement the technical tools of a trader. So you can be able to draw chart lines, you can be able to use the Fibonacci tools, all these tools that a trader can be able to use to decipher the market direction. Okay, so it's actually easier for you to be able to understand how the market works if you get yourself into these particular types of markets as a beginner. Okay, so I hope this video has been helpful to you guys. Do keep it locked to this YouTube channel. Of course, I'm going to be dropping more of these educational videos. And yeah, do share, subscribe, and like this video. It really helps with the algorithm and to be able to recommend this video to more and more people. I recently found a comment from someone in Zambia, so shout out to all the guys who are watching me from outside of Kenya as well. I really appreciate your input and just tuning into this channel and checking out my videos. And yeah, I will see you guys in the next video. Peace out.